Good morning and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite in Times Square, New York City, we have Nasdaq's very own Dan Carrigan and Lourdes Figueroa of Figueroa Capital. We're going to focus on Treasury futures at Nasdaq as well as the execution of our first trade. Thank you very much both for joining us at the MarketSite. Dan, I'm going to kick it off with you. Let's talk about Treasury futures at Nasdaq.
Well, up till now, there's only been one choice in the marketplace for Treasury futures, contracts based on price. But we had a chance to meet with various bond fund managers, and they told us they actually measure risk in yield and not price. And that's been our focus in our new contract, DV01 futures.
All right, and so what exactly is DV01?
Well, for a fund manager, as I mentioned, they measure risk in terms of yield. So if the rate goes up by 1 basis point or 0.01, their corresponding Treasury bond goes down. It's roughly $830 right now. So we thought it was prudent to create a futures contract that would give an exact hedge for that $830.
All right, now Lourdes, this is an interesting story. Figueroa Capital executed the first DV01 trade on NFX. You're an equity trader trading at Treasury future via an energy trader at Nasdaq. I love this story. Tell us more about it.
That's correct, Jill. Basically, I've been trading equity derivatives for many years, and the clients I represent are really looking more to do financing trades. So it's been more in like a Delta One type environment, and I was looking to expand into the Treasury world and have it through an exchange traded option. So when I actually started Googling and found the DV01 contract that was trading on the Options Clearing Corp, I said, my goodness, this is phenomenal because that's the infrastructure that we have always used. And for my clients, it's about receiving financing at a fixed rate and having it collateralized with an underlying asset as a treasury. But what actually made this even more exciting was a couple of things. First of all, that it was cash settled, which I think is very important. And the counterparty risk being the Options Clearing Corporation. And really, because I deal with both the buy side and the dealers, the big, large dealers, one of the reasons that the dealers like this type of option is normally when they do repos, you have to have direct bilateral counter credit, lines of credit, excuse me. So what ends up happening is you're limited into who your counterparties are. I like to think that this trade really was the democratization of the repo market, because now it allows me as an agency broker in the middle to really farm out to very large funds that may not necessarily have these direct lines with the dealers and be able to offer financing. And at the same time, the dealers want access to these desks. So it's really a win-win. And really, when we started modeling the trade, what I even actually like about it more than even doing equity derivatives is that this has a slight directional component to it. So depending on the strategy that the client chooses to employ, you can actually, instead of just having a perfectly hedged position, take a bit of a directional bet, up or down the yield curve. And that's really, I think, what makes this so exciting and why I was so happy to really get involved with Nasdaq on this product.
Do you think that we'll see more growth in this type of market?
Oh, absolutely. Because again, I think what's very interesting, I came at this I am not the target market or my clients for which this product was developed, yet we found a perfect, suitable application for it. And so I bring an entirely new, different market that we can use. And so far, I have to say, we're 16 days into the trade, and the results are actually better than what we even modeled. So we're actually very excited. And what I'm doing now is very actively speaking to other participants to get them engaged in, because I think that's what this trade is actually going to do. It's going to bring in a whole slew of new participants that really were never engaged in this type of market.
All right, thank you so much for joining us at MarketSite, Dan. Thank you as well. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.